So good morning, ladies and gentlemen, and thank you very much, Mr. Ozonis, for inviting me and for the organization. And of course, Mr. Nunes, thanks a lot, of course, for the invitation. And it's really a pleasure to be in here. You know, you may know that EIOPA is seated in Frankfurt, a little bit cold these days. So it's really a good opportunity for a Southerner. I'm Portuguese, to come to Athens, and I feel at home, of course, and I understand that I brought the sun with me also, so it's very good, and thank you very much for your hospitality. So I'm really looking forward to share some thoughts on you on how can we close the pensions gap in Europe, but also in Greece, and how what kind of role the occupational pensions can have in doing so. And it's very important because, of course, as we saw this morning, pensions are about social cohesion, and it's very important that we take decisions that, of course, are taking everybody on board, and the role of employers, the role of employees, the economic landscape. But definitely all these measures need to take one objective at the end of the day, is that we should close the pensions gap that we have for our society. And I know that very often this ends up in very ideological discussions. It should not be like that. We should have a discussion more based on facts, on economic reality, and on the needs that we have for our citizens and the future generations. So looking around the room, of course, I see very different types of faces. Very happy to see young faces, some, not so young. Others, let's say it like me, already beyond the young. But we all have one thing in common, is that one day we will stop working, and one day we will need to have, a retirement replacement ratios, retirement pensions to live. And of course, for some of us, it will be sooner than later. But no matter the date, I think we should all be able to count on an income that guarantees us an adequate standard of living in the duration of our retirement, which, by the way, becomes more and more longer, which is a good thing, of course. And while this should be a right, and in fact it is a right under the European Pillar of Social Rights, for many the prospect of a sufficient retirement income is only an aspiration. Because the reality is that the pensions landscape has changed dramatically over the last 20 years. And for many, the changes have made it more difficult to secure a comfortable retirement. A generation ago, it was normal to stay with the same employer for most of our working life, to receive a retirement pension from that employer as well as a pension from the state. This is no longer the case. Today, people are likely to have several employees over the course of their working life. They will move cities, they will move even countries for work. And not every employer, of course, will offer a workplace pension. More and more people take part in non-standard forms of work, have intermittent periods of unemployment, or choose to work for themselves. And these are the people who now find that they have fewer choices when it comes to save for retirement. Times have changed too for those in more standard forms of work. Schemes are changing from defined benefit to defined contribution, shifting in some way the risk from employers to employees. The aging population has put pressure on all types of national pension schemes. Reforms mean that people have to work longer before they can receive their state pension, and payments might not be as generous as they have been in the past. And where people choose to invest in personal pension products, they are, of course, seeing also sometimes some poor returns and some high costs. And also the low interest rate environment is, of course, not helping. In short, the pensions gap is growing, and it's growing across Europe. More and more people are facing the prospect of an impoverished retirement. Our challenge is then to close this pension gap and to be courageous enough to take action. And this requires, I would say, a real radical shift in our approach to retirement pension. There is no magic formulas, ladies and gentlemen. and there is no one-size-fits-all answer to this. But while the pensions landscape is fragmented across Europe and pension gaps will be different in each country, there is, of course, still space for commonalities and for a European approach. Because if everyone's goal is comfortable retirement, it is for all of us, pension fund providers, insurers, asset managers, employers, governments, regulators, supervisors, at the national and at European level to make sure that this goal remains within reach. And it remains for everyone. Now, at EIOPA, we have, of course, been discussing all of this and trying to contribute to close this pension gap. And we're bringing a number of ideas in this area. First, I will mention the need to understand the big picture. And that will believe that we need to have a dashboard that will be calculated at the national level with the numbers, of course, of the national level, but also seen in a European context. This, we believe, it should be the first step. This means that looking at national pension landscapes holistically, to consider the dynamics and the connection between the three pillars of state, occupational, and personal pensions. It also means looking at the labor market situation and at the current financial environment. Every country will have different strengths and different weaknesses, but every country needs to look at the big picture to see where their pension gaps lie. So a European pension gap dashboard will help, and we are working on this. A dashboard will make it easier to identify the overall size of the pension gap in the different member states and the contributing factors and the overall vulnerabilities that are present. Putting together data generated at European level, supplemented with indicators and occupational and personal pensions, would provide an overview that could be used to determine the different factors driving the pensions gap. Like adequacy. Does the pension system generate sufficient retirement income so that people can maintain their same standard of living during retirement? And sustainability. Will current or projected pension replacement rates continue to be affordable? These are two, of course, closely connected, and a dashboard will help to surface the dependencies between the two. In many member states throughout the Union, and in Greece that was the case, of course, pension reforms on the state pension level were put in place to increase the sustainability of these systems. And let me be very clear, it is fundamental, of course, both for the sustainability of the systems and for the sustainability of public finances that this is done. This is, of course, very important, and it has been done in all member states, I would say. But this has a consequence. And the consequence is very clear, is that the projections in terms of replacement rates are going down. In Greece, for example, what I've seen in the latest numbers is that the projection for the replacement rate, which is right now broadly at 64% at the retirement age, will go down to around 43% by 2060. And I can tell you, there are other countries like mine, for example, where this is even worse. So, while it is, of course, fundamental to make these adjustments in the first pillar, it is also equally fundamental to make sure that reforms are made in the second and in the third pillar to supplement the first pillar and to make sure that we have a possibility to maintain the levels of replacement ratios in the future. And this is something which, to be very honest, have been done only in some of the European member states, not in all. So there are coverage, of course, from the different pillars, different in most member states. According to the recent figures that I've seen, Greece is actually one of the countries where the occupational pensions have the lowest penetration in Europe. My figures are that only 1.3% of people of active working age saved into an occupational pension in 2016. 1.3. This is, of course, hugely suboptimal if you want to have a supplementary pensions regime that contributes to close the pension gap. Yet in other countries, the picture is very different. Look at Denmark, for example. Over 90% of the people in full-time work pay into an occupational pension scheme. In other countries, like Netherlands, like Sweden, have very high levels of occupational pension coverage and fulfill the key income replacement function in old age. So it is possible. We do have success stories. So we must build on good practice and develop a blueprint to build sustainable occupational pensions in Europe. The occupational pensions landscape varies so much from country to country, but broadly speaking, countries face the same type of challenges in developing sustainable occupational pensions. Some countries need to establish more types of these pension funds. Others may face issues with participation and levels of participation. And there are different, I would say, building blocks that need to be assessed and worked upon. And at EIOPA, we have identified around of these 6 building blocks. Setting up new schemes, increasing the take-up, how to help employers to minimize the risk when moving from defined benefit to defined contribution, how to make schemes more attractive, and of course, taxation, as in here, a very important point. How to make the schemes future-proof, how to guide the transition to retirement with suitable retirement income solutions after retirement, and how, of course, to protect future beneficiaries. These are all very important elements in the design of a proper framework. There is no one-size-fits-all model, as I said, but there are, of course, established good practices throughout Europe that can be used to make reforms and to change the landscape. And one very important is about encouraging participation. It's not enough to have good frameworks, schemes, and products in place. We can only succeed in closing the pension gap if people participate. So what can we do to encourage participation? And especially participation from low-income earners. Participation that can build up a more gender balance, because it's also something that we see in Europe, that women have definitely a lower pension replacement ratio than men. So what can we do to this? Once again, we can look at experience and what have been done in various countries. It's clear that in Greece, occupational pensions are mostly voluntary. I think there's only a few occupational pensions that are mandatory. This doesn't result as we see. So we don't see people actively wanting, of course, to build more second pillar pension or third pillar pension. But experience from some countries shows that there are solutions to deal with this. For example, in the UK, there was a very important policy reform some years ago where they put in place what's called auto-enrollment, in the sense that, of course, companies, and this is very important for all companies, and especially for the smaller and medium ones, are enrolled automatically in an occupational pension, and of course they have the possibility to opt out and to leave. That's in their wish, of course. So this kind of semi-mandatory regimes and frameworks showed that it can work and it can bring the participation to, of course, much higher levels. So with this kind of, default contribution schemes, we believe that we can have effective implementation, but of course they need to be well designed and well implemented. They have to inspire trust from the sponsors, from the employees, from the scheme members. They must strike the right balance by improving participation without overburdening, of course, employers and providers. So we have to find ways for small employers to join forces so that they too can offer contribution schemes to their employees. And we must put measures in place to monitor the impact of default contributions and to track non-compliance on the side of employers and providers. This is, of course, a lot of work, but we should also acknowledge that people will most likely to be ready to engage, as we have seen in the UK, for example. So from a saver perspective, from a member perspective, I think this is an important option that should be considered. We know that if people know that they should save more, they are reluctant to do that by themselves. So with this auto-enrollment framework, people don't have to do anything to become enrolled. Employers are also likely to, already trust their employer and therefore to have confidence in their ability to pick up the right scheme and to manage it in an effective way. And one of the most important things that we can do to encourage participation in occupational pension schemes and the more retirement savings is, of course, to provide the right level of clear information. As it was mentioned this morning, the EIOPA directive now requires occupational pension funds to send to their members an annual benefit statement outlining their pension contributions and the value of their pension on a yearly basis. EIOPA has worked with national authorities to develop a model of this pension benefit statement, one that shows how to provide clear information to members on what they are saving and on the value of their pension pot so that members can take more informed decisions about their retirement savings. And we will be published this, I think that either still this week or next week. These combined with the pension dashboard will give people a better idea of what they can expect to receive. And this is very important because today people are simply not saving enough. And clear information is a good first step in helping people to take control of their finances and their futures. And this brings me to personal pensions, an important but often underused part of the pensions landscape. It is clear that there is a great need for products that help people to save for their retirement, complementing the national but also the occupational schemes. Here we need smart, simple, digital-first products that meet the needs of today's consumers. Products like the one that we are working on, the Pan-European Personal Pension Product, the PEP. Savers will be able to take their PEP with them when they move jobs, when they move countries. The basic PEP will offer an affordable and capped default investment option. And savers will receive clear and comparable information about performance and will be able to switch providers if they would like, but also with the costs being kept. As a digital-first product, the PEP is what people, and especially young people, expect today. A product that is easily researched and purchased online and services that are available through the touch of a smartphone screen. We need more products like this for the younger generations. And because I believe that the PEP is an important step in giving European citizens an alternative, sustainable way to close the retirement savings gap, we are encouraging, of course, governments throughout Europe, and I encourage also, of course, the Greek government to consider an appropriate tax treatment to support the development of PEPs in Greece also. I need, of course, also to touch the elements of sustainability. And sustainability is at the heart, of course, of the pension challenge. All the proposals that I've talked about have sustainability at their core. Strengthening the occupational pension regimes will also support the demand side of the capital markets union. Higher participation would result in more assets, more long-term investment, which in turn would stimulate the demand for investment. And access to better investments should ultimately deliver better retirement income for the future beneficiaries. And let me be very clear. The angle that we are working, and we are very committed on the discussions right now on the new Capital Markets Union, the angle that we're bringing is that by using capital markets, we can improve pension adequacy. The first objective, and the most important one, should be to close the pensions gap, to build better and more adequate pensions. Capital markets need to be there to provide a solution for this, not the contrary. And this, I think, it's a very important element, and we believe that it's possible that, of course, using capital markets in the best way, that we can have, I would say, better returns and better pensions in the long run for the citizens. So I think this is very important, and I hope that these proposals will come soon to the table of the European Commission also. But also we need to take account of the so-called non-financial sustainability issues in the pensions area. As large investors, pension fund managers can use their financial power to incentivize and engage with businesses to act responsibly and ensure long-term value creation, playing, of course, an important role in this gradual transition to a more sustainable and resilient economy. EIOPs should identify environmental, social, and governance risks in their investment decisions so that fund managers can better manage risk and members are better informed about how and where their money is invested. Occupational pension stress test that we carried out last year showed that on the whole, the majority of EIOPs in Europe are already taking the right steps. About a third of the EIOPs have processes in place to already manage these environmental, social, and governance risks, and about a fifth of them already assess the impact of these factors in the investment risks and investment returns. But also when we look at equity investments of pension funds, they really appear to have a high carbon footprint relative to the EU economy. So a lot of work needs to be done in here if we want to make this transition, and definitely also in Greece in this case. So the sustainability of pensions is of course a major concern, not only in Greece but across Europe. And I would like to bring you from my side a couple of observations. And let me be very clear and transparent. I'm not coming here to tell you what you need to do. It's your role as a country, as a government, and as a society to decide on what you want to do in the pensions area. But I'm coming here very clearly to give you some recommendations from what we see at European level and what we see in the Greek pension market. And I would say that this is a huge opportunity right now. This is the time to take these, I would say, important and courageous decisions also politically. Greece is coming out of one of the most difficult crises in its existence. The economy is going better, it's growing. This is the right time to make these reforms. And I will say, for me, there are two major important elements in these reforms. And I think that they need to go hand in hand. Firstly, I would say that there needs to be a reform on the structure of occupational pensions. You need to have more freedom to build up occupational pensions in different ways. But at the second point, this bigger freedom needs to be accompanied also with, I would say, a reinforced supervision and reinforced supervisory activities. And I will explain a little bit about this. What do I mean by more open and more flexible legal framework? Well, you should have the possibility to build up pension funds with less than 100 members. There's nothing in the European directive saying that EIOPs should only have more than 100 members. It's fundamental to take care, of course, of the small and medium-sized companies, which are the backbone of the Greek economy, that you allow the creation of pension funds with less than 100 members. But in that case also, you need to provide the possibility to have multi-employer pension funds. That's what brings also the economies of scale. You need to have the possibility to have funds with employers from different sectors. And you need to have more competition on the management of these pension funds. Competition between insurers, between asset managers, different types of pension providers. This will bring more competition, more professionalism, reduce the costs, better governance. Don't be afraid of do that, of open the market. But you also need to have different investment options to be offered. It is, I would say, a pity that you only have one type of offer. You should have different possibilities. And also, there should be the possibility to offer different payout possibilities. Beyond lump sums, you should have the opportunity to have, annuities, mixed types of for the different type of retirees, drawdowns that can be taken from the pension funds. You should also have more transparency and better information, as I mentioned. So this is a huge opportunity to be more open, I would say, to be more, give more freedom to the market. But this freedom needs to come also, of course, with reinforced supervision. And this is very important because if you really want to boost and open the market, you need to create an ambience of more trust and confidence by the citizens, by the members, by the public opinion. And to have that, you need to have, I would say, a stronger, more unified, more professional also way of looking at supervision. So I really encourage the Greek government to consider a reform on the current model of supervision in the occupational pensions area. We know that there are the three authorities, and I'm sure that they do the best, of course, that they can. That's not in question. But it's also clear from the peer reviews that we made at EIOPA that we gave clear recommendations to rethink the structure of supervision. And I really believe that if you want to make a clear evolution in the occupational pensions in Greece, you need to do that. You need to have a stronger, independent, more resources, more integrated professional supervisor. One that can be much more, I would say, responsive to market developments, that can have a further dialogue with the industry, that can apply risk-based supervision, more proportionate supervision, that can have the capacity to identify early risks, early vulnerabilities, and to act on them in sufficient time to protect members, but also to protect the sustainability and the stability of the market. This is what brings trust. This is what brings confidence. This is what brings credibility to the market and to the supervision. And I think it will be very important to go in this direction. I know this is sensitive, as always, when we talk about institutional frameworks. But to be very honest, I've been in this job for many, many years. I've seen it happen in Greece, actually. Before 2010, the insurance supervision in Greece was also completely scattered in very different type of authorities. That was not optimal, I can tell you. I remember very well. In 2010, there was the decision to bring supervision of insurance sector to the Bank of Greece. And I can tell you that, we believe that now you have in Greece, in the insurance sector, a professional, a competent, an independent supervisor. And this, I think, so it shows that it's possible to make this move, while, of course, we understand that it is sensitive to very much, of course, different people around the table in Greece. So in conclusion, ladies and gentlemen, I think this is an ambitious agenda. I recognize it. But it's an agenda that is necessary because we collectively need to take all the possible steps to close the pension gap. And at EIOPA, we are committed to find solutions to help member states to strengthen their pension landscape, solutions like the ones that they're proposing here today. And together, I think we have really a responsibility. I think it's clear we see where we're going to. The economic reality is there, the facts and the numbers are there. If we don't do anything, we will not be able to deal with pension poverty in a number of years. And this is something which, as we've seen this morning, attracts a lot of difficulties in social cohesion in our societies. So, as a European authority, my message is that we are here not to tell you what you need to do, but to give you some recommendations and, of course, to come and to be able to work with all of you to help to make the change that is necessary, to empower people and to make sure that, like the new European Commission motto, that we have an economy that works for the people, that we have a financial sector that works for our citizens, not just when they work, but also when they age and they retire. Thank you very much.